Hello traders, welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you this morning. Good morning to Eileen, Bernard, Merdad, great to see you. Bernard, we'll definitely take a look at the DAX. I actually have that coming off of an interesting resistance region too. Bernard saying he's short, he's looking for long entry. We'll take a look at that for sure, Bernard. 99.30. You know what, let me just take a quick look at that right now. I just want to make sure you don't miss exit or entry on that rather. Yeah, I have 98.86 swing lows from, or the opening range low that you made in the first day of September. I do think you can get a little bit more of a downswing on this move here, but we'll go over that again in a minute, Bernard. Just a quick reference for you. So for everyone in the room, great to see you. Lots of things to talk about today, lots of scalps in play. We're currently flat, just closed out a position on the Aussie Yen. We'll go over that from last night's radar chart. Aussie and Kiwi look good. Aussie looking a little bit better, coming into an interesting support range here as well. And then obviously we'll talk about the US dollar. So before we get started, obviously a quick relative performance of what the dollar is doing. Broadly stronger today against most of its major counterparts. You see some minor gains versus the Swiss yen and euro. Some of the European blocks doing all right here. But Kiwi down 0.36, CAD down 0.39. Nice rebound in dollar CAD. We'll look at that as well. Aussie down 0.9% and sterling down 0.91. Sterling saw some really, I don't want to say it was bad, but weaker than expected inflation coming out of the UK this morning. While headline core inflation held at 1% as expected, the month-on-month read did come out and show contraction. So we've been seeing that it's been a disappointing picture. It's an anti-inflationary environment essentially everywhere, guys, what all these central banks are trying to stoke. One of the reasons that you see this rush to the bottom as far as depreciating currencies. With that said, you saw obviously sterling, biggest loser today, down 0.91%. So we've had the sterling in our sights. That's been a beautiful scalp. Aussie dollar has been in our sights. Kiwi dollar has been in our sights. I think the better play, was last night's Aussie Yen, and we'll go over that in a moment. But before we do, what happened last night that charged some of these declines in some of the commodity currencies? If you were in the webinar yesterday on Daily FX, the archive of that clearly noted what we were looking for is the com block overstretched. And I think we got the response here today. You got China data, which came out worse than expected. The trade surplus did expand, but imports declined, right? Or was it? Sorry, guys, one sec. So here's what the data looked like last night. So again, while you did see exports top expectations, we were expecting contraction of 7%, only got a contraction of negative 1.1. Imports did show a bigger than expected drop. So while the surplus is bigger, certainly imports less is aggregate less demand. They've been trying to stoke their economy. One of the major things that we've seen in the Chinese economy is their attempt to really move it more to a consumer-based economy. And based on that, obviously things aren't looking too good here with a contraction of 17% year on year in imports. So a lot of people saw that as a negative. Weaker imports in China inherently are going to hurt the commodity block. So you've seen Kiwi come off, Aussie, the biggest trade partner with China, also coming off sharply based on that news. This print actually turned out to be a beautiful entry on most of the commodity pairs. So on the Aussie Yen trade that I took last night, it was a perfect fade on a rally on this data. Obviously, the data wasn't all that good. The initial print of 376 billion did see people jump on the long right off the bat, but then when you look into the deeper metrics of the data, it's not all that compelling. And that rally offered a beautiful entry. So Cameron saying China CPI number will come out tonight. What will be the impact? So we do have China inflation tonight. We are expecting a hold at a drop from 2% to 1.8. PPI is expected to hold at negative 5.9. Look, with a number like this, Cameron, it's already baked in that we're expecting to see CPI slow. Right? And again, as I said earlier, everyone's trying to stoke inflation. Everyone. That's the whole point of all these central banks are trying to do right now. A deflationary environment or disinflationary environment can be very, very risky and a much harder tailspin to come out of than too much inflation. So it's already baked in. Cameron, that we're expecting a 1.8% print. If it comes out weaker than that, that's the risk. And I would expect to see risk turn over a little bit more, maybe a little bit more of a sharper decline or another extended to that pullback that we're seeing in the Aussie and the Kiwi and some of the commodity currencies. So that's to keep an eye on there, Cameron. If we do get a stronger than expected print, I really wouldn't see anything above 2% moving the needle here because we're at 2% or the last read reflected 2%. So that's the risk as far as the China data later tonight. Good question. Good question. But we're already expecting it to weaken. So the risk is on a print sub 1.8%. What will be the impact on U.S. oil? So I don't really like to extrapolate too much of a necessary oil play based on pure China data. We'll take a look at oil, Cameron, on its own merits in just a couple of minutes here deeper in the webinar. As I said yesterday, looking at the oil chart, it was at resistance, guys. It was at clear resistance. So we're expecting a pullback. I do think the oil trade can get a little bit deeper on this pullback. Inevitably, it's a buy. As long as we hold above key support. And I'll show you that chart in a moment, Cameron. Remind me if I don't come back to it. All right, man? So that's a quick preview of the data that we get tonight out of China. Also, keep in mind tomorrow, or not tomorrow, excuse me, on the 18th, heading into the close of the week, we also do get retail sales data, and that's going to be a big print too. U.S. data for the day is pretty light. We don't really have much on tap. We'll be looking for retail sales print tomorrow morning. That'll be the first big player of the week. The second big player of the week is going to be the CPI print, which will be on Thursday. And that's going to be sort of a major thing markets are looking at. We've continued to hear Yellen say that all this, higher oil or weaker oil prices, all these, disinflationary pressures are all transitory, meaning they're temporary. And she's continued to postulate that interest or inflation expectations remain pretty well anchored, looking at ahead in policy. So if that's the case, again, the risk here is on a weaker print, sub expectations. 1.8 is where we've held core for a couple of months now. If we look at historical prices, we have been stuck at this 1.8 figure essentially for the majority of the year. You saw a couple of blips there with the 1.6 and 1.7 print, but the majority has been pretty sticky with core inflation in price growth at 1.8%. So if that starts to downtick again, expect there to be a little bit more pressure on the dollar. Interest rate expectations get kicked out even more. There's an interesting piece on CNBC today. I like to call it our Cartoon Network because sometimes it's just frivolous, the type of information you get on there. But there was an interesting interview with Fisher, who is former head of the Dallas Fed. And it was very interesting. His take is the FOMC should just move on interest rates. And the markets are essentially telling them, just do it, get it over with. It's hard to see them doing that at this point with the spillover we've seen in equities, with sort of the weaker data we got on NFPs. And if inflation comes out weaker than expected, forget about it. Really hard to justify them moving on policy now. So quick preview into the data for the week. I hope that helps, guys. But our job here is not to interpret data, it's to trade it. So where are we from now? Here's what the dollar index looks like. I did have a dollar chart on the radar charts, we'll go over in a moment for the near term. It's been a perfect play. We just came into resistance. The only thing I wanted to highlight here is the confluence support structure that we talked about last week. Basic 618 retracement off of the advance from the August low. You have the 200-day moving average, which slips right in there at 11,919. Area of support is exactly where we found support yesterday. And on today's pullback, 200-day moving average catching that rebound exactly. Also note momentum turning here ahead of 40 keeps the market really more range bound. We do have a slight downside bias still, but near term, you want to be mindful of a little bit more of a stretch higher here in the dollar. Here's what it looks like on the 30-minute, and this is why I'm not really trying to press any dollar longs from here. Here's what the 30-minute looks like. So this was highlighted yesterday on the radar charts. Okay, and we were trading at 11,939 after getting some divergence into the lows with a break above 50, taking us above last week's low, 11,929. That was this pivot right here. So this was actually the long trigger. Stops against the lows here would have still worked beautifully. And we said we were looking for confluence resistance into 11,956. Today's high was 11,956, so we came right into it. This is a confluence region of support, of resistance. Okay, you're looking at the median line off the highs, which has offered some nice pivots and some nice breaks for that matter, and that basic 618. This is off the near-term advance from that late swing low in September. So could get some more downside from here. If we breach above this region, you're looking up all the way up into 11,980, possibly right into the upper median line parallel. So the opportunity for this, for the dollar to show a little bit more of a strengthened rally here is definitely there if we breach the high that we made in overnight trade. That's what I'm trying to say. You also have the 100-day moving average, 11,968, a level to be mindful of. 11,968. Let's mark that here too. All right. So knowing where the position of the relative dollar index is can really help us, like I said, kind of get a better gauge of what we should be looking to do with the dollar crosses. You don't want to correlate them specifically inversely, but certainly the propensity to give us at least a little bit more conviction on the trade is there. So dollar index, look at resistance, 11,956 into the head of U.S. trade. Keep in mind, this constitutes a break of the initial weekly opening range. So we should find support, 11,940 if there's more upside to go. Inevitably, we would be looking to sell that. Okay, as we noted yesterday on the Aussie and the Kiwi, all of these pullbacks we're playing, guys, are scalp in nature, right? Near term. We're just looking to play the correction. At the end of the day, we would be looking to inevitably go back on the long side, but that matches perfectly with what we're seeing here in the dollar as well. So keep those sort of pictures in view. So that's the dollar index from yesterday's radar chart. I guess we should just go right through the radar charts first. Dollar CAD was first up. Here's a trade that, again, we don't want to be calling the low, but yesterday looked pretty compelling to me in that you had some, again, divergence into those lows, a proposed pitchfork off the low. It was too soon to tell if this was really in play, which is why I had it on the radar charts instead of a highlighted scalp. Haven't gotten involved in this, just for the record. I'd rather play this by way of Euro CAD, which is stretched into a beautiful high overnight. But the advance here seems to be holding this near-term pitchfork pretty well. Here's what dollar CAD looks like first on the daily. Okay, and then we'll look at the 30-minute in a moment. We talked about this level extensively, just below 1240, 2948, 2950. You had a 38.2 from the advance off the lows in June. You had the lower median line parallel. And on the extreme, you had that 100-day moving average. We never actually got a caught of it. We never actually tagged it. But an area of which you'd start to look for a turn in price. Momentum just barely dipping below 40 before recovering. So the bearish invalidation level for the broader trade here is 131.38, which is the open for last month. And that also coincides beautifully with the median line parallel of the highs. Am I playing alongside of dollar CAD? Personally, not yet. I'll show you the scalp in a moment. The ATR is just starting to pick up pace, but this has been an area of which we'd start to look for possible short exposure. Here's what the dollar CAD looks like near term. So again, it's been holding, actually, it held that median line formation pretty well. Topside objective at 130.70. We just came shy of that. 130.66 was the high in overnight trade. You have some serious divergence here into the highs. So if this is the structure we're going to operate on, look for near-term support at the lower median line parallel. And a quick trick, if this is a near-term pullback here into the U.S. Open, tag on a quick retracement. And the 38.2 comes out right here, basically above the 130 handle. So some quick levels of reference there for the dollar CAD on this rebound. This is the critical support, bullish invalidation near term for the dollar CAD. If we break back below that, sayonara. Just look right back at that 29.50 level, and obviously the lows. The broader structure that we're trading in, still in view. Okay, we haven't broken it. Same one we're looking at in the daily chart, right here. Okay, which is why, again, 31.38 could be on the cards before this thing turns over. Any questions on dollar CAD? Beautiful rebound. The support that we expected to hold held. Near term, the risk is for a little bit more of a spike higher, but we'd be looking for short triggers heading into that 131 handle, 131.38. And as far as dollar CAD data or Canadian data for the week, you're pretty light. The only thing you want to keep in mind here is US data. So retail sales tomorrow morning and the CPI print later in the week. All right, so those are two of the charts from yesterday's radar charts was dollar CAD, dollar index, and next up was Aussie Yen. Here's what Aussie Yen looked like last night. So I made a quick post here. I kind of added this to the radar charts after I initially published it, just because the spike into 88 and failure to hold above the weekly open here really shifted the focus to the downside. So here is the data print for China. Again, that spike offered a beautiful entry. Momentum held below oversold conditions, so I was comfortable holding this position in overnight trade. Quarter of daily TR is giving me about 30 pips. Excuse me. Losing my voice too early in the week here. Aussie Yen looks like this on the daily. Okay, we're at support, which is why we've jumped out of the position at this point. But a couple of things to note here. First of all, we cleared the highs from last week, or last month, excuse me, and we're testing them as support. So we're looking for some support here. We cleared the upper median line parallel for the formation off of the December, or this was November highs of last year. We're checking that as support. One thing I want to see real quick is if this parallel. It's messy. I'm not going to work with it. But the upper median line parallel, former resistance, should be acting as support, and the current operative support for the ascending structure off the lows. So all of this is in view for Aussie Yen. And as we noted yesterday, this was a far out stretch, guys. This was, I don't know if I added it here in Aussie Yen, but essentially this was like a 9-day stretch to the upside. Okay, and last times we've seen that there's been near-term corrections in the pair. So inherently we're looking for a pull to the downside. Again, commodity block seems stretched out. So long story short, here's what the Aussie where the Aussie Yen looks like on the 30 minutes. Where is it? There we go. So again, the spike to the upside, I'll show you the 5-minute in a moment. The spike to the upside was the entry on this one. Downside, you were looking for initial targets right here. I think that was 87.50. Subsequent targets down into the 50% retracement, and that's 87.25, 87.26. 30 pips is what you're looking at for your ATR. So every 30 pips that we achieved, shaved a little bit off, brought the stops down. Here's what it looks like on the 5-minute. So there was the China data. Clear spike into the highs. Momentum couldn't even make it through 50 on a 5. The stop is right against the highs for essentially the Asia Pac Open. And you're looking for about 30 pips per scalp. So on the first initial drop, only took a couple of minutes. We dumped out a quarter of the trade. You start to stall here on momentum and put in some divergence. So before I went to bed, I took another quarter off the trade. We left half on. Limit was right at 87.28. And that's where we got out of the remainder of the position. So at this point, again, you're still getting that ongoing divergence signal here on the 30-minute. You could get a pop to the upside. Bearish play stays in focus sub 88. Okay, and that's the lower median line parallel. Near term, the risk is still for a spill back into 86.90. Okay, the lower median line parallel, a 1618 extension off the highs, off the lows, excuse me, and the high swing high that we made back last week on the 7th. It's a beautiful setup. Beautiful setup. Even on the near term, though, like I said, there's a little bit of a risk here to move higher. So if you're not already short, if you didn't get into the position You got a trigger break here, a hold as support. Could get a little bit of a rebound, but eventually be looking back for a tag of that median line before we start to move to the upside again. If the turnover is legit, and again, as it stands right now, it's a pretty convincing reversal candle with momentum turning ahead of 60 on the daily. So if it's a more significant breakdown, look for that move sub 86.85 to open up a larger decline towards the 86 handle and then 85.50. So just really clean levels here on the Aussie Yen. Any questions on this setup? Eileen says, for Aussie Yen, where are you looking for a good short entry after any rebound and the stop? So again, 88 would be the ideal entry. As far as a stop's concerned on that one, I'd probably put it against last week's high, 88.30. Remember, you're pretty limited to a 30 pip stop, so we want to really try to make our stops 30 pips or less. And it would need to be a pretty convincing hold at 16 momentum. So that'd be sort of the first area I'd start to look. If the U.S. opening range, Eileen, pops open, we rally back into 87.50, and you get a short trigger there, I'd be even comfortable taking a quick scalp against that. Here's the thing, guys. As far as the stops are concerned in your entries, you have to be nimble on it. It's really hard to plan that before price action moves because we're so determinant on what near-term price action is doing. So watch the opening range for the U.S. The more important thing would be if we get a rally towards the 88 handle, the median line parallel. This would be your ideal entry. Risk is for a drop back into this region first. And this is what's going to be the near-term bullish invalidation level or the medium-term bullish invalidation level for this formation. Remember, real symmetry, very clean slopes, okay, has been guiding this entire advance off the lows. And another thing is I'll put really tight stops sometimes, guys, if it's just a punt. If you see a quick rally right into the highs and it quickly fails, you get another test, and on the second test it fails, I'll be happy to jump in there with a 10 pip stop, Eileen, and see if it happens. Not only that, if you take a stab at it, guys, I'll also take a lot of break-even stops, more than I'd like to admit. But I have no problem taking a break-even stop, reassessing the situation, and if it's still something I like, you're just offered a better entry. So not the type of strategy you want to be stubborn in, not the type of strategy that you want to continually press a trade that's working against you. You can really make a mess of things. So nimble is the name of the game. Eileen says, okay, I see them both. Thanks. And if it breaks down 86.86, you just watch it and not jump in. So let's say it breaks down into 86.86, right? Then you see another rally into the close of Europe. If that rally can get us back against that high with a 30 pip stop, I'd jump in again at that point, looking to drop into 86, 86.80. Right. Okay, wait for the rally. She says, yep. If you don't catch the initial break, it's never going to be in your best interest to sell a break of support. It's always going to be your best interest to sell a rally. What this does, the break here is validates our bias. Can't really jump into that position unless I have a conviction stop. If you are going to punt it and just going to make a scalp out of it and try to chase it real quick, I don't recommend that unless you're really, been working with this strategy for a while and you have that comfort. Other than that, we need to make sure we're staying very, very objective in our risk to reward ratio on every trade. Doesn't matter if it's a swing or a scalp. Eileen says, I don't recommend that either, right? The problem is, Eileen, is that someone will do a move like that. They'll sell a break of support and chase it, and they'll make money on it. And if they do that, they start to think that that's a behavior that they can continually merit for success, but it's really a recipe for disaster, okay? And that's the whole thing with near-term and intraday trading, guys. The propensity is there for you to watch market movements and get excited and kind of try to chase a move. We have to keep an objective, sort of neutral, benign type of trading environment. So keep that in mind. Good questions. All right, so that's Aussie Yen. We'll see if we can get entry back on this trade. I think you're getting a little bit more juice trying to squeeze this one. The ATR for the Aussie is still under 30 pips, somewhere in the range of 22, 23 pips, where the ATR here is starting to widen out here. 31 pips looks good for me. And again, if that's the ATR, every time you attain that, take something off. Take something off. Okay, stops are down, break even. By the time we had booked this one last night, the stops were inside break even. They were right against this swing high. So keep that mentality in mind. Always, your capital preservation is paramount in every trade you do. Okay, so those were last night's radar charts. Dollar CAD, dollar index, Aussie Yen, dollar CAD and Aussie Yen in focus. Aussie Yen's probably still a play right now. Dollar CAD, we want to see if that stretch can get us a little bit higher. Here's what the intraday update, I'm going to speak in a British accent, update looked like yesterday. So again, highlighting the com block. Both of these looked pretty good. So the Aussie looked like, or the Kiwi looked like it was ready for a turnaround. Here's what it looks like on the daily chart. Let me bring that up first. Oh, Hudson, or excuse me, Christopher, sorry about that. He says, no chance of a simple 50 retracement, then an equal leg move to 131.80 area on dollar CAD. Definitely a possibility. Why would you say not a possibility? So again, we'll jump back to dollar CAD real quick before we move on. But you could get a 50, a spill a little bit lower to 29.83. Could be possible. But I'd like to respect the near-term structure if this is the play that we're going to make, Chris. I do think you inevitably see, 31.80. I'm not sure. Again, I'm looking for 31.38. I really don't have much in 31.80 per se. If you are going to work the long side of this, Chris, I'd be looking for targets into 31.38, 31.40, basically the median line. It could stretch into that, but I would rather not participate in that last stretch and look for the short triggers at that point. Does that make sense? Asking that, it seemed you might be more bearish. 50 area of cycle from 930. On this move, I have it on the scalp chart. So this is what you're talking about, right? 31.78. So the 50, the decline. Could be it could be very well. I don't really know. I think the decline still needs another low. That's what I'm looking for, Chris. Just from a wave count, you'd expect to get, a little bit more of a move to the downside before it actually stretches higher. The broader trade is still constructive, don't get me wrong. But, this thing has been on a rip here for quite some time. You can see the severity of the first initial correction that we had earlier in the year. Momentum, crazy divergence into that high. So yeah, I think the rally, could give you a nice upslope. Do I want to really play the longs toward 180? I'd rather be looking for entry there on the shorts. Chris, does that help? By the way, quick reminder for anyone who's newer to the room, I see a lot of people in here today that are fresh faces. Feel free to take a snapshot of any of the charts that you see here presented. You can always do that by clicking on the camera in the top right-hand corner if you need to keep a picture for your reference later in the day as you're trading. Chris says it does. Thank you. You're more than welcome, Chris. Interesting trade on dollar CAD. I'll tell you that much. The turn is beautiful. The sheer level that we turned at, where momentum was, really nice move. Christopher says, first day in the room in a long, long time. Well, it's good to see you back, Chris. Cheers, mate. Feel free, as always, to throw out any questions that you have. It will take me a minute to get the language again. Hey, no worries. And if there's any questions, Chris, as always, like I said, feel free. So to jump into yesterday's scalps, here's what the Kiwi dollar looked like on the daily chart. And we'll jump into the intraday in a moment. But, we're playing the correction. And as we noted, the risk was to the downside. We loved the short here. moving into a nice little pullback. It's just a level of resistance that mirrors the swing high that you made in July. It's nothing too crazy, nothing too fancy. But it was really the near-term picture on this that made this a little bit more compelling. Remember, we went over this yesterday in the webinar as well. This thing, similar to the Aussie Yen, saw a pretty significant upside stretch of 7 days to the upside. This shows you consecutive, so the first day to the upside doesn't count, but 7 up days in a row, okay? Takes you into the highs here from the swing highs that we made back in July. Near-term momentum was turning over. You got some divergence into the highs. A near-term structure was at resistance, you name it. So it looked primed for a pullback. How deep that pullback gets, I still think you have a little bit more to go. Here's what it looks like on the intraday. Here's what we looked like yesterday. So China data comes out, obviously starts to weigh a little bit. This was pre-China data. Inevitably, that print did push this lower, right for the tag of that near-term support structure that we were talking about. This is just an ascending formation off the low, and this is a sliding parallel that was made on the first day of the month. So while we're above this region, we really don't want to get too excited on the shorts. We're very nimble. It's really a break below 66.18, 66.20 if we get it. That would be a little bit more of a significant pullback. That level, besides just being a basic 236 off the low, is also reflected here as the swing lows that we made back here in July. Also, the former median line parallel that held the advance off the lows, former resistance, now support. So any way you look at it, like 66.19, 66.20 should be the bullish invalidation level. I'd be comfortable playing short triggers while we're in this formation. Really don't know if I want to play this region, and then this would be the bullish invalidation. This would be a nice entry possible for the long side. We'll have to see how deep the correction gets here for the Kiwi, how strong the rally gets for the dollar. All right, so again, the Kiwi turned out to be the better play yesterday. This is still a pretty tight ATR at 22 pips, but the risk for a near-term turnaround here is definitely there. And here was the initial trigger, guys. So divergence into a trigger break. 9 times out of 10, this will be a beautiful trigger. So price action pushing into a new high, the oscillator making a lower high, followed by a trigger break to the downside. A real tight stop there would have worked beautifully. Machi says, new here but impressed. Cheers. Hey, Machi, well, welcome aboard. Great to see you in the room. Eileen says, where would the short be for Kiwi after the breakdown, the stop? Where would the short be, or where would the stop be for the short after the Kiwi breakdown? If we break what, Eileen? If we break down below here? If we break down below here, the stop would probably be against that swing high that we made back on the 7th of last week. I mean, ideally, Eileen, the resistance would be former median line support. So even if that breaks, you could get a rally right back into that to show us the downside move. These breaks that we're looking for just invalidate the buys, so not necessarily when you want to jump in, right? But if we do get that break on an initial pop to the upside, my stop would most likely be against that 66.46 level, 66.50 level. Make sense? Again, intraday price action should dictate the stops. Okay, yes, and after the rally again, if this level holds, or if we come into this region, you start getting some long triggers, ideally a stop against that low that you made back on the 7th, the same day. But if this does give us a long trigger, you wait for the pull or the rebound higher, the pullback, and then a stop against whatever low was made there would probably be the best way to play it long. Eileen says, okay, see them. Thanks. Yeah, more than welcome, Eileen. Always great questions. Again, I don't want you to stress the stops that I'm quoting you now. This is kind of just the idea of where I see price action going, right? At the end of the day, if a market comes into this region, this is the opening range low. You hover there and you get a topside break in the pullback. The stop would be against whatever that low is. Don't just blindly put it at 66.46 because I said so. Let near-term price action guide you. You know what I mean, Eileen? So if we bottom out, topside break, sure, against the low makes sense. On a break of support, the first stop I would come to mind would be whatever the opening range high was for the session. And if we can get that within 22 pips, then it's a trade we'll be interested in. Eileen says, yes, just trying to get into your mind as you watch things unfold. Yeah, well, that's what we're here for. So feel free to keep those questions coming. So the Aussie dollar setup is essentially the same thing, and I want to leave a lot more time today, guys, for your questions. I felt like I kind of rushed a couple of those last week. So feel free to throw out whatever pairs you're looking at, commodities, equities, DAX. We'll take a look at the DAX for Bernard, as always. Let's see, we got dollar CAD out of the way, dollar index out of the way, Aussie Yen, Aussie dollar. Oh, no, we're doing Aussie dollar now. Kiwi dollar we got out of the way. Oh, we want to look at Euro CAD as well. So here's what Aussie dollar looks like. A little bit better of a compelling play. Here's what we looked at last night with the Aussie. The initial daily chart was coming into that key area of resistance, and that was namely the 38.2 retracement of the decline off the highs from May, but more importantly at the 200-day moving average, which has offered some nice pivots in price earlier this year, also in that region. Okay. On the back of, again, another 9-day stretch to the upside, or 8-day stretch to the upside, whatever it was, the thing was at risk for a pullback of some magnitude. Now, we're not looking to reverse the entire play. There's been a significant and market change in the momentum behavior on both the Aussie and the Kiwi, more so compelling on the Kiwi because that's broken above 60 for the first time, essentially this year, where Aussie has just broken above 60 for the first time since, May. So it's even more of a compelling case for the Kiwi, but a market shift and a change in the behavior of the momentum signature is always something that we pay attention to. So while the near-term focus, as I said it yesterday, is still weighted to the downside in the immediate focus, inevitably that pullback should offer some nice long positions. So jumping into sort of what we were looking at in the broader structure for the scale chart, a couple of median lines were in play yesterday. And this was really the first area of support as we were writing the report. We said, look, we're testing the median line support at this point. We were trading it right around 73.23. You had the median line off the lows. You had the current operative embedded median line structure was right there. And we were like, look, if this thing breaks, look for a possible drop as low as 72.76. Okay, and that's going to be a basic 236, nothing fancy. But more importantly, it keeps us within the confines of this really sharp ascending embedded structure. Okay, the one that you see in gray in the background there is still something I'm looking at. I'm not stressing it, but that would be the near-term invalidation level for the turn within this structure. Here's what it looks like on the scalp. Okay, so again, some divergence here heading into the highs. Remember, when we're looking at divergence, we're only looking at the candle closes, not the wicks. So you had some really nice divergence building, a break below 50, and there was where we were trading last night. So again, the data for Aussie or China comes out. This thing spikes right into the lows for U.S. trade. It holds and then slams right back lower. Took out targets at 73.10. Next target right here, 72.80. 72.76. Sorry, I guess there was an adjustment that was made to the fib level here. But you get the picture. 4 pips off. We're about to hit that right now. Now, near-term support, I would want to see some hold here. If this continues to break, if you're holding shorts on Aussie right now, I would just be bringing the stop down to the opening range high for US and see if you get the break. It looks pretty heavy on momentum. Here's what it looks like on the 5-minute chart. Okay, we've been resisting 60 on every rally, resisting 60 on every rally. So you could see a move lower. I'm not really on board with jumping into a fresh short from here. I'd want to see either move back towards 73 so I can get a decent stop against the highs here if possible, 73.25. Or if we do break to the downside, again, we'd look to see if we can sell a rally. This is the next support structure I'd be looking at. And the only thing I wanted to highlight here is that gray pitchfork. It's been a little loose on the upper and lower median line parallels, as you can see here, but it confluences with that swing high from last week really nicely at 72.33, 72.40. Mario says, I got stopped out of my short position yesterday at 73 at, you mean 73.80 for the Aussie? Oh, you got stopped out right at the highs, Mario. Oof. Let me ask you a quick question, Mario. What got you into that position? What triggered the short? Because remember, if you're taking it on a scalp basis, we don't want to be in the habit, guys, of trying to fight the trend. So, um, there was not really many compelling short triggers to open up the week until you got into this high and you start to see momentum plateauing and giving you divergence into the spike high. That was a 50% retracement, an area we'd be looking for resistance. You had the upper median line parallel. So if anything, I would have started to look at for shorts right near 73, even on the initial spout here near 73.60. So, okay, trigger on the 5-minute, right. So again, make sure if you're taking triggers on the 5-minute, we're not ignoring the still basic levels. So if you're taking a trigger on the 5-minute, we should only be looking at triggers on the 5-minute for the short side at resistance. You know what I mean? And this is a good clarification question, Mary. Again, I don't mean to harp on you, man. I just want to make sure everyone, I'm sure a lot of people make the same mistake. Guys, you'll get short triggers all day long. You'll get short triggers all day long. Every couple of minutes, you might get a short trigger. I drill down into a 1-minute at times when I'm scalping, right? And you'll get short triggers all over the place. But it only matters if the market is at resistance. Same thing with the long side. If I'm looking to play longs, the only triggers that matter are when price are at support. Now, if you get a break of support and you're looking to play the rebound, that's different, right? Then it doesn't necessarily, it still needs to be at the former support, now resistance, to get the short trigger. So we want to make sure that we're keeping that in mind, because if we just take a short trigger based on a 5-minute chart and its own merits, if price isn't at resistance, it can be really, really frustrating on a move like that. So Mario, I don't want you to shake that, man. Eileen says, glad for Mario's question. Me too. So I'm sure other people run into issues like that in near-term trading. Just keep that in mind when you're getting to the positions. That being said, you had the right idea, right? And a lot of times, sometimes, even if I get stopped out of the trade and it moves in my direction, the confidence is there that, you know what, I was actually right on point. Maybe my entry was off. Let me go back and see where I got in. Maybe my stop was too tight. Let me check it out. But I hope that offers some color for you, Mario. All right, so 72.76 is on tap right there right now. Looks like momentum's trading pretty heavy. Again, I'm not going to jump into anything right ahead of the market open, but a break lower beyond here, you do risk a spill into 72.33. All right, so that is Aussie dollar on its way down for a nice little correction here as the dollar rebounds. The picture looks pretty nice. Last but not least that I want to go over, guys, real quick is Euro CAD, and then I want to jump into your questions. So Euro CAD, one other thing, quick note, and this is just coming off the top of my head, but I think it adds some color because it actually helped me out yesterday. When I was in the Aussie Yen position, I was wondering if I should just book the rest of that profit at 36 pips, 40 pips. One other thing I'll tend never to do is close out a trade that's in oversold condition if I'm short, and close out a trade that's in overbought condition if I'm long. The market pushing this signature into oversold means there's that much momentum behind it. So if I'm holding a short, very rarely, if the signature is in oversold condition, will I close it out. I'll look for the next target to the downside, put my limit there like I did last night, and let the market do what it's going to do. With the same respect, I won't try to fade this if it's in oversold condition or overbought condition, meaning I'm not going to try to play a rebound and test any longs until we recover back above 30. So just some quick notes there on real near-term RSI and how I like to use them on the intraday trades. Last but not least, EuroCAD. And it wasn't highlighted on yesterday's piece, but what a beautiful setup it was. This was from earlier in the week. Here's what EuroCAD looks like on the daily. So essentially, this thing was holding right to open the week just above, or just below rather, the median line parallel from the highs. The rebound that we made last week was such a clean and basic level, and it was a nice confluence. My favorite setups, an extension overlap from the highs. The 1618 was right there at 45.60. Basic 38.2 off the lows, 45.90. A little bit bigger of a region, but so is the ATR here. And you saw a real nice rebound. Momentum. We need to see what today looks like, but it looks like we want to go for a trigger break here, dating back to the highs for the year. We're now testing the monthly open. Okay, and that comes in at 48.75. And I just want to bring your attention to the radar chart that we published on the 7th. I believe it was. There was an update on the 8th as well. So here's what we look like on the 8th. We were right in this downside slope, and we were looking for a possible break for a stretch into 148.70 is basically the monthly open. It also completes a 50% retracement off the high. It's basically where we are right now. Okay, here's what the intraday chart looks like. Nope, it's the wrong one. Too many charts. Too many charts. Oof, Aussie Yen ahead of schedule. 86.86. There's that near-term support and the lower median line parallel. Keep that in view. Euro CAD looks like this. Okay, so let me snap the lines for you real quick. And then there's a couple of trend lines here involved. So let me just explain this for you real quick. This is what we looked like last week. Here's that pullback. It made an exact 618 retracement, held that low, and then we rallied right into the weekly opening range high to close off the week. Now, if we take an extension just from last week's, or we take a pitchfork just off last week's lows, you can see it's continuing to guide price action very, very nicely. And there was that confluence resistance we talked about in yesterday's webinar, 47.80, topside break, 48.50, 48.70. You're basically checking the October open. All right, so this thing stays constructive above. Whoops, I hate messing with my fibs. This thing stays constructive above this lower median line parallel. It coincides with the former upper median line parallel down here, right near 47.50. So nice little opening range. Essentially, all of European trade has been holding this range just below the October open. So if you get a downside break, expect that drop. At that point, I'd probably just tack on a quick retracement. Let's adjust these levels, actually. Hold on with me one sec, guys. Just want to check out a couple of things, see if there's any extensions that have been completed on this rally. Okay, so this is what we'll do. It actually works out much cleaner this way. The operative extension off the low puts that 100% at 48.29. That's near-term support, and the low that you made in European trade. Break beyond that, you're looking at that confluence region, which is dead on with the 618 and the Friday high, 47.47, 47.50. Breach higher. The initial target is going to be 49.25, which is the 618 decline, but the confluence with the operative structure takes you into 46 or 49.60. And again, this coincides well with that rebound in dollar CAD. So a little bit more CAD weakness in the near term, give us a little bit lift. Euro dollar is completely dead. It's such a boring trade. I haven't even looked at it for the last couple of days, but a good way to be able to diversify away from necessarily playing the dollar as you head into retail sales tomorrow and CPI. Just something you want to keep in mind. But you are holding and testing resistance. I mean, this is, it's, the monthly open. Momentum has been giving you divergence all along the highs here. So you want to watch this momentum breakdown sub 16, specifically sub 50 would be a little bit more of a comfortable move. Something to keep on the radar. Haven't had any necessary plays in it yet. Remember, larger ATR, so keep your stops a little bit more comfortably wider. But a quarter of the daily is still giving you about 42 pips. Any questions on EuroCAD? Definitely something I have on my radar. I haven't operated on it specifically, but another commodity currency which is in view. All right, so let's jump through your questions here. I saw a couple of questions. First, I'm going to go into Bernard's question on the DAX. Here's what the German DAX looks like. So again, Bernard, this level that you see right here represents something, if I recall. The reversal day close. I knew it was something. So it's the high day close for September. Let's put that in there. So the September high day close caught the high yesterday, almost to the pip. What do I mean by that for anyone who's new to the room? The high day, the day that the high was achieved, typically the closes of that session, especially when they're reversal days like it was here on the 9th of September, tend to be important key technical levels. And you can see that that caught the high almost to the pip yesterday. Here's the move to the downside. One other thing I'd want to point out, Bernard, is that the momentum signature has really failed 50 miserably. I mean, we literally spent 3 days trying to breach that 50 level in momentum. We couldn't do it. So expect the pullback here to be a little bit more severe. You could get 99.88.6. Like I said, that was the first low that we made back in September. A basic 52 or 50% takes into 9,812 here, which is the 50%. I know that you're looking at 99.40. But we're trading there right now. You're looking for this for a near-term structure. I'm sorry. I thought earlier in the session, I thought I read that as 98.40. 99.40. Let me see what this looks like near-term for you. Come on. Not the cleanest structure. So here's what I would expect, Bernard. You could probably see a little bit of a rebound here. I bet you that the 38.2 is right there. Let's bring that up. Just below 99 is where the 38.2 is. You could probably see a little bit of a rebound below there, but to me, it still looks like near term this thing wants to turn over a little bit heavier. So I'd be looking for a long entry a little bit lower down. If you're holding that short still, I'd be looking first initial area of support, still unchanged, basically 98.86, 99. And then right here down at 98.12 would be the next area of major support. Long entries favored into those regions. Bernard, hope that helps. You know you're an avid trader of the DAX here, so I try to keep this chart just updated for you, my man. Interesting trade that you're also seeing in some of the other equity indices. Here's the ASX Aussie 200. You know, that one saw a quick peak above that confluence. I love those confluence regions. Again, saw a quick peak above 52.33, 52.47, and then a recovery yesterday with the close below keeps the downside bias in play. We're basically looking for a move back into just the lower median line parallel. So a 38.2, I already looked at it, comes right in this region. The swing lows from last week, specifically on the 7th, all coincide right down here. So I am expecting a little bit more of a pullback on this. SPX looks a little bit different. I don't really see too much more downside here. You know, we're testing basically a longer dated median line, which was broken, retested, but you can see that slope off the middle has been catching so many highs that, you know, here it is acting as support a little bit lower down. Whoops. Into that region. Could catch the lows here on a pullback, but the big thing is if this thing breaks 2021 to the upside, there's plenty of room. So really important days coming up for the SPX, especially with inflation and retail sales data on tap. I think you'll get a nice move on this one. Bernard says, okay, and thank you. Very helpful. Hey, it's my pleasure, Bernard. Always good to see you here. Um, Alan says, hi, Mike. I'm short the cable and long grandpa. Banked half for both, but wondering when to bail on cable. Alan, let's take a quick look. So the British pound is another trade we've been following, if you guys recall from Sunday's update, which again just was a ridiculous move. Ridiculous move. So here's the intraday update from Sunday. And here's what the British pound looked like. So we were at risk for a turnover here. You know, 54.47 is the ideal level we would have wanted to short this. But look, when the market speaks, ain't no point in not listening. And at the end of the day, you know, we made another spike at the highs, didn't ever really show us a clear conviction close above last month's open, which was 53.40. And today we're posting a massive outside reversal day at the monthly high. Not going to fight it. Okay. Momentum doesn't get more conviction reversal than that. It's a 3-point trigger at this point. 50 held twice like rock solid as a ceiling. Looking lower. Yeah, looking lower. So the break point was 52.98, essentially 53. Here's what the scalp looks like for a British pound at this point. Let me just snap these levels for you. Christopher says, so happy you said that. I thought I was the only person who missed a sterling short by a few pips. Nah, no, I mean, listen, it's no point in getting all frustrated over a missed trade. I hear you, especially with all the setups that I present, guys, and all the setups that I publish both here in Daily Effects. It's super frustrating. There's no way you can get into all of them, Chris. So cherry picks the ones that you like, and if you miss it, doesn't matter. As long as the market moved in the same direction that you were looking, confidence in your analysis. It's all about confidence in what you're doing, and the market will always provide more opportunities. There's no such thing as, you know, a missed opportunity that won't come back again. Here's what sterling dollar looks like on the intraday, and again, the levels are unchanged, guys. The same exact levels from Friday, so or from Sunday. So if you want to take a look at this, this is the update from the 11th. Just go on the intraday page. You can find that, but right on cue. Right on cue. Really clean opening range. The initial rally into 53.80 did inevitably hit last night. And that was last week's high. Failure to hold. CPI data, weak. You name it. You had a double whammy here. Break of the weekly opening range low. Break of the bullish invalidation level that we noted. Break of the lower median line parallel. Here we are on our merry way. Near-term support at this point, you're looking at 151.86. Like I said on the daily, 151.86. 151.80 was the high for the first day of the trade of the month. High 151.79. So I would be looking in immediately lower for a tag of, this is a longer day trend line. I just want to show you guys. Just a sliding parallel from the lows that you made in April. It comes in right alongside that swing, the swing lows we made from May. It's basically right around the 151.87 level. Any questions on the pound? At this point, well, I guess to answer your question, Alan, wondering where to bail out, I think this would be the first area of support I'd start to look for. You're just a couple of pips off that. Let's tack on a quick retracement on this and just make sure there's not like a 786 right ahead of that. That's a nice pivot there at 51.65 as a subsequent target. Just want to see what the 764 looks like. Ooh, that's even nicer. So yeah, I'd be looking for support in this whole 10 pip, 15 pip region, 17 to 85. Okay. In fact, if this opening range breaks to the upside, so if the U.S. opening range sets up here and then you see a topside break, expect to see a little bit more of a rally. I am looking for another low, though. I'll tell you that much. Just my personal humble opinion. Hey, Alan says, cool, thanks, bro. Hey, anytime, man. My pleasure. My pleasure. Nice trade. Beautiful trade. We've been waiting for it for a while. I missed it. Unfortunately, the crossover Asia into Europe has still been awesome trading conditions. So watch the Asia Open. A lot of the trades have been panning out into the Asia Open, and the majority of the bulk of the move happens in Europe. So like the Aussie Yen trade from last night. So keep your eyes up on that. I'll give you an update later today. No oil today. No, Cameron, I think I definitely got you on oil. Watch out. Hold on one sec. We're running way over on time, but let's jump into the oil trade real quick. Here's what oil looks like. Everyone's going to be watching it. I do think you have more downside to go. I would love to see this thing into 45.87 or so for a move on that region. We reworked the levels from yesterday, so keep this in view if you want to take a snapshot. Real convincing day yesterday with the pull off that momentum holding 60. You're testing the median line here, so you might dribble here for a couple of days, but as long as we stay above that slope line from the low, basically at 38.2 of the advance off the off the yearly low, you're still looking for some more downside. Okay, gold, very interesting level as well, coming into some support. You saw that hold the opening range lows essentially in overnight trade. I wanted to post this chart, but I don't really know what you want to do with this right now, guys. I think gold is a wait and see. I don't think it's tradable at this point. We talked about this, for the last 2 weeks on the long side, but now we're at a major resistance. Remember the weekly chart that we're talking about? This is former support off of the 2014 lows. Now resistance. You have the upper median line or the median line off the lows, just higher from where we are right now. And on the 30-minute, you basically broke the highs from last 2 weeks and you came back as checked as support. So I don't really know what the play is from here. Resistance is not too much higher. So I've kind of just have this on the view for now. You remain constructive above, 1151, 1155. Immediate bias remains way to the upside above that region. That's what I can tell you. It's just with the dollar strength that you're seeing a little bit of rebound off support. It could cap the top side for this near term. Could cap the top side near term. It's interesting because today you're seeing dollar strength and gold strength alongside it. Okay. Christopher Hudson, Euro Yen. I didn't go over Euro Yen for you, did I? Here's what Euro Yen looks like. Real quick snapshot. Feel free to take a picture of this. Okay, so we're still working with that operative slope off of the lows for late September. Okay, the confluence region and the near-term bullish invalidation level for the advance off the lows still remains right at 135.70, 135.80. Lower median line parallel and a nice Fibonacci confluence. 100 off the low, 618 off the high. Love those plays. Love those plays. So expect to see a little bit more of a drop here, or maybe a pull into the lower median line parallel. We'll be looking for long exposure there. If momentum is well below 40 at that point, or if we break into oversold condition, probably would dump that idea. But there's a reason I haven't really been looking at this right now. I'm not really too crazy about the euro in and of itself, and dollar yen hasn't done jack, right? So, guys, dollar yen is going to make a move, and the first move it's going to make is probably going to fake out some heads. Okay, people are probably going to get faked out on this. So waiting for a definitive break on a close basis. Forget the spikes. It's happened too many times. Too many times. We need to close outside of that consolidation region to get this going. And I think when you finally get that, we'll have a little bit more conviction on the yen crosses outside the Aussie. All right, the Aussie yen is sort of the epitome of the risk on, risk off trade, which is why we're still trading that yen cross. So Chris, I hope that helps on euro yen. Again, I'll give you an update on that as soon as it comes back into focus as a trade that I'm like actually operating on. But right now, I kind of got shook out of it. It's been a lot of chop. Nice ATR, but I'd either want to pull back here to get long, or the rally I was looking for here to get short never happened. It failed way ahead of it, and in fact, ahead of last week's high. So, those are the key levels I'm looking for. Hope that helps, man. He says, always gratitude for the extra clarities. Cheers to my pleasure, Eileen. Christopher says, got it. Thank you. More than welcome. Got to wrap it up there, guys. We'll be back tomorrow, same time, same channel. All of these setups are in play, so cherry pick your entries. Watch the data as you head into overnight trade. More importantly, we'll be looking for that retail sales data tomorrow. That'll hit right before the webinar, 8:30 Eastern. So keep your eyes peeled for that. Best of luck trading, guys, and we'll see you tomorrow. Cheers.